Hi everybody, it's time to preview what to look out for in the week ahead in financial markets. But first, a quick reminder. Please click the like button and follow us if you find these videos useful. So this week will probably still all be about the coronavirus, but the two big events I'm watching are the monetary policy meeting of the European Central Bank and inflation data from the United States. But before I discuss these in more detail, let's check out the most important releases from the economic calendar. So we start with Japanese GDP, late Sunday or early Monday, depending on where you are. Japan is on the verge of a recession. If this number is bad, then the yen might not work well as a haven when stock markets start to drop again. German CPI will be important before the ECB meeting because inflation is what the ECB target when they are setting interest rates. And of course, Germany is the EU's biggest economy. In the UK, there is manufacturing data which is too old to factor into the coronavirus effects. But on Wednesday, it is the first UK budget since Brexit, and there are high hopes for lots of government spending to boost the UK economy, which would be good for the British pound. Of course, markets are being driven up and down by coronavirus fears right now, and the ECB meeting will be the first major central bank meeting since the outbreak. Stock markets have been dropping and haven currencies like the dollar and the yen have been rallying for two reasons. Number one, because travel restrictions are slowing business and consumption. And number two, because central banks have so far refused to say whether they will lower interest rates to support the economy from any decline brought on by the coronavirus. We don't have high hopes that President Christine Lagarde will lead the ECB into taking any action this time. If you consider 2 weeks ago that the Bank of Korea left interest rates unchanged when South Korea had the highest number of coronavirus cases outside of China, it gives you a clue what could happen in Europe. Also, the euro-dollar currency pair rallied back above 1.10 because of hopes of higher government spending in Germany. So why would the ECB step in to help the economy when the German government might be about to? We think the ECB will probably talk about downside risks, but there will be no action and no big hint about future action, which should be euro positive. Now let's talk about US CPI. Data from the United States is always the most important in forex markets because the dollar is the world reserve currency. US inflation could be a big mover for the dollar, as well as gold this week, because the Federal Reserve has been using inflation as their excuse to keep interest rates unchanged, despite the US economy doing well. US CPI for January was 2.3% annually, above the Fed's target of 2%. Higher inflation is by default good for the dollar because it should lead to higher interest rates. But at some point, investors could start to lose faith in the dollar if there is inflation without a monetary policy response, which would be good for the price of gold and bad for the dollar currency pairs. Well, that's it for this week. Please make sure you like and subscribe to these videos, and if you're interested in technical analysis, make sure to check out our weekly market analysis webinar on Monday. It will be on YouTube and other social channels.